And it's time for business news with Richard Southern. Richard, the Ontario government had projected a large deficit for this fiscal year, but it turns out that isn't actually the case.
No, it's not. Some very interesting developments out of Queen's Park today. Tina, good to see you. The Ford government, as is required by law, they revealed everything they spent and didn't spend last fiscal year, which ended in March. Turned out the government last year had a lot of leftover money, a $2.1 billion surplus. All of it, though, went to pay down the debt, which now stands at $380 billion. Government also revealed it spent $1.4 billion less than planned on education. Everyone, all the reporters, asking the finance minister today, hey, how come you didn't spend all this leftover money on health care?
We've increased funding in not only the physical infrastructure for hospitals and long-term care, but we've also seen since the pandemic over 11,400 new healthcare workers hired in this province. So we've been there in the healthcare sector.
Government officials say the surplus is the result of revenues that were 20% higher than the forecast budget, largely due to inflation, the high inflationary environment actually helping out the government's bottom line. But the NDP not impressed that all this extra money wasn't used on healthcare or education.
This is demoralizing for healthcare workers who have been struggling for years within an underfunded system. It's devastating for Ontarians who can't access the healthcare that they need it when they need it. It's disappointing for students from JK through to college and university with hundreds of millions not spent on their schools.
Tina, one other note here with that surplus that we now know we had last year, it would have triggered an automatic wage increase for MPPs. They make $116,000 right now. It would have went up to $143,000, but the finance minister said today he's going to table legislation to freeze wages at their current levels.
Right, yeah, lots of interesting developments there. All right, well, the trading week is over and investors may want to avoid looking at their portfolios over the weekend, Richard.
Oh, it wasn't pretty. Tina, it hasn't been a pretty week.
Yeah.
To be fair, it hasn't been a very pretty year for stocks, with the TSX down, about 10 or more percent on the year. Closing bell rang on Wall Street, and investors, they were selling going into the weekend. The Dow fell 486 points today, down 4% on the week. NASDAQ tumbled 200 points. The TSX down more than 500 today. Everyone fretting about rising interest rates. This past Wednesday, the U.S. Central Bank pulled the trigger on another jumbo-sized rate hike. And that has many now thinking that a recession may be all but inevitable. Oil and gold prices pulled back. The loonie is at a fresh multi-year low, below 34 cents U.S. What were they buying on Bay Street today, Tina? Recessionary names, things like Dollarama was higher. Highliner Foods that makes frozen fish sticks was up, and cannabis stocks, names that you'd think would do well in tough economic times. So not great news there.